What's going on, everyone, and welcome back to my 1 year update on Fundrise. So it's been a year, little over, and ever since I invested about $1,000 on October 24th, 2019, now we're at November, happy November everyone, we are looking at around $1,038.79. And since the last time I logged in, I'm at about $5.89 of appreciation. So you guys might be looking at this number, $1,038.79. You're crazy for investing. Well, let's do a little comparison. So just doing, rough paper napkin math, that you're looking at 3.8%, almost 3.9%. For 1 year. Well, considering everything else that's been going on, now if we take October 20, I think the nearest one was 25th, so 1 day off, compared to the VNQ, which is the U.S. National Real Estate Index, is that they're down 18.63%. Now you guys are saying, well, what about dividends? Okay, at max you're looking at what, maybe negative 13, negative 14%. So you're still down in the red, almost 15%, somewhere between 13 and 15%. So that 3.8% is looking a little hefty compared to that. And over time, I'm just going to go through, give you guys the rundown. If you guys don't know what Fundrise is, it's a private real estate trust that, or syndication, either or. It allows you to invest into real estate that they break down in a easy to understand visual way. So let's just go through the rundown first. So all time, we are looking at $12.32 in dividends. Now, I am in the long-term growth. What does that mean? That means that dividends are going to be included, but they're not going to ramp up until these properties that they start building, as you guys could see, for example, these are new acquisitions. I was looking more for a...
Investors from all over the world are pooling money to invest in real estate. Integra Platform is an online crowdfunding real estate investing platform for everyone.
Click on Withdraw button to send a withdrawal request. Your income will be transferred to your wallets.
Start investing today with Integra Platform and buy your dream property.
Let's see if I can find one just off the top of some of these. Okay, so Renovations, for example. So Fundrise, since I'm in the long-term growth, they'll buy properties up. They'll take it, they'll renovate it, and then they will either borrow more money, BRRR, or they will sell out. As you guys can see down here, they exited out of a project for roughly 11% so per year. So I am in this long term. Most of my most of my investment appreciation is going to be through the appreciation of assets. Meaning, when they do buy these properties, for example, right here, new acquisition, rental town home community in Nashville, Tennessee. This is, they're buying this up, and then through appreciation on the asset and through dividends later down the line as they raise rents, as they either renovate. I didn't look at this specific property itself, but I'm just giving you the general rundown of the long-term growth plan. But as you could see, the appreciation is going to be much higher than the dividends, almost a little over double. And the way that things work out is, instead of the supplemental plan where quarterly you're going to get these jumps, well, as you could see on my plan, when I put in $1,000 on the 24th of 2019, we barely saw $1, $2 until boom, 1 quarter later, $15. So essentially, you might see a little more supplemental, maybe 4 times a quarter. I don't know exactly how it does work, but I know that it ramps up faster as far as day to day, but quarterly we are kicking it. As you could see, quarterly, we go from basically $1 up to then 15, and then, a few dollars up, boom, another $10 jump, and then another quarter, and then it's, $5, $6 jump. So the long-term growth, the plan is you buy properties that are, you're going to fix them up, you're going to renovate, you are looking for a appreciation in the asset, and then if you could get dividends down the line, if you hold the asset, you think that it's going to be performing on a very good schedule down the line, and it's going to have a good tenant, then you're going to keep that asset, keep raising rents, keep collecting those dividends down the line. So let's just do a little rundown. And now, one of the reasons why my portfolio isn't actually as high as it can be, something that I didn't get into, was my biggest fund. So when you invest into Fundrise, legally speaking, you only could have so much money per fund. I believe it's 50 million, somewhere around there, for, it might be any private equity. I'm not sure. Don't quote me on that. But I'm almost positive there's somewhere like I think it might be a 50 million mark for, I'm not sure if it's private REITs or funds, private funds. Don't quote me on that. You could definitely look it up. But there's definitely a cap to when you have initial investors. You only could have so much money. So when there's too many people, what do? They start a new fund, of course. The problem is, if it's a new fund, well, there's no properties yet, and you know how long real estate takes. If you're going to acquire a property like this, for example, let's just take this Nashville. We're just going to look right into it. So, as you guys know, real estate takes months just to even buy properties. Now, in something like this, that is, going to be crazy, millions of dollars, let's go. This is why I do like Fundrise. It's visual. You can see everything. I'm going to open up this specific. So it's the lofts at Rosemont in Nashville, Tennessee. I love Nashville. Went there a few times. No, not a few times. I went there. No, I think it's one time, and it was pretty fun. They have the square where there's bars on every single corner. Who knows about that now, but... For example, this is $10 million, so a hefty property. Don't know too many people who are buying $10 million properties outright, if at all. So, for example, they bought a stake into, so they bought 100% equity into this property. So they are the only shareholder of this property. I'm going to assume that it's going to be mostly of the growth holder portfolio. But the thing is, Fundrise actually wants to stay into projects that are somewhat stable right now, B to A projects, maybe some C, just because of where commercial real estate is going to go. I'm, completely unsure. Properties by us are getting slaughtered, so we're going to see how that sticks up over time. That's why they're sticking of apartments. That's where people are putting their money. Multifamily apartments, single family homes, not too much on commercial. Eventually, there's going to be a very big time. Maybe if the market drops a little, we'll see what happens with the lockdowns. You can maybe pick them up for 50%, 50 cents on the dollar for commercial real estate. But anyways, so let's go into this project, for example.
Investors from all over the world are pooling money to invest in real estate. Integra Platform is an online crowdfunding real estate investing platform for everyone. Start investing today with Integra Platform and buy your dream property.
I do not remember my for example, when I was talking about buying properties on the long-term growth. So buying a house, just imagine a single family home maybe takes at least 1 to 2 months minimum. Now buying a property like this, where if they don't have to get the finance, if they're going to buy it outright, I'm not sure if they did get a mortgage on this. I am not entirely, I believe they might just own this outright if this is what I'm looking at. As far as the equity, I believe they have 100% equity into it. I'm going to have to read more onto it. But for example, this is going to take at least 1 to 2 months minimum, if not more, if they didn't have the equity outright. If you have to get lenders and everything else, then it could take a lot longer, especially for commercial. Well, this isn't commercial, but for a big property like this, you're going to have to find private lenders and other things like that. So what I was getting at, if I remember correctly, was that for long-term growth, when they have new projects, they're actively buying it. If they have a new $50 million, yes, that's a lot of money, but at the same time, one, a lot of these properties are expensive, and two, it just takes months to actually own the properties. Then to give out shares to the holder, it's a lot of time in between. So there is going to be some lag on the growth, on the long-term growth, but over time we should be seeing minimum at least 8 to 10% a year at the low. I'm projecting at least 11%, I'm going to say. That's what I'd shoot for as a conservative estimate. And now, for example, there is commercial real estate that they did buy. This is rated A3, so I believe the last tier of A, A rated. But if you guys look at this, you could see stabilized commercial, okay? And they are actually the only shareholder into it, and they paid $3.5 million. And what are they going to do? They just bought commercial property in South LA. What's going to happen to LA as far as everything goes? Who knows? The good thing about this is that they do list pretty much everything about it. I believe they're purchasing this outright, if that's what I'm getting at, because if they did have a lender, it would say 57%, and then you could do the total. I'm not entirely sure. That's what I'm going to have to read up on. But I believe since they have so much money, I think they're sitting on $100 to $200 million of cash the last time I checked. So they're sitting on a lot of cash. It's hard to tell. Are you going to put all your money into commercial real estate when you don't know if tenants are going to even be able to have their stores open? It's hard. And as you guys could see, one of their newest investments was 5.6 to 10%, which is not bad at all. You know, you usually want that 8 to 10% on real estate. The good thing about this is for a lot of private funds, residential real estate, you're sometimes looking at 4%. If you go to the V&Q, they're expecting so about a 4.61% dividend yield. And usually over time, if you look from 2009, if this would work, from 2009 to, let's go to 2019, what are you looking at? So 10 years. So, wow, actually that's a lot, but that was the bottom. So you were looking at a 33% in the 10 years. That's a lot, but that was literally the bottom of the real estate market. From now on, I don't know what's going to happen because this includes everything, residential, commercial. We're going to see where everything goes. There's definitely lag in the market, but if there's no tenants to fill out in commercial, it's going to be hard to see. Anyways, going back to the account, I'm just going to show you some of the performance overview just to give you guys a little under the hood for Fundrise. So if you guys could see in a percentage look, most of my funds are in the ramping up fund, the growth E-REIT 5. So we're not seeing too much appreciation, and that's because it's ramping up. They only have 2 properties. So that's one of the only problems. 73% of my portfolio is in a ramping up stage that might take a year or 2 just to fill out properties. Now, after that, that's when things are really going to kick up. But something like the Growth E-REIT, this is one of the originals. As you guys can see, year to date, we're about 6%. So not too bad in a faltering, let's just say, economy. On the East Coast E-REIT side, we're at 6.9%. So closely, I would put at least 6% if everything was doing well. That's where I would estimate my funds would be at least 6%. And this is growth oriented. So even the East Coast isn't growth, only the growth is. But it's actually a little behind the East Coast. So it's hard to tell, guys. This is unprecedented time. 3.7 for the year so far, and that's because of everything going on, plus the ramping up funds. But overall, it's a place that I parked, $1,000, and I'm just going to see where it runs. I'm letting the dividends reinvest. I'm not taking them out. And that is basically my 1 year return on Fundrise, about 3.7, 3.8%. So, guys, it's a long-term investment vehicle. I have almost 70 active projects that we are invested into. Some A, this is the newest one, some D. We're going to be seeing some definitely long-term gains. This is a long-term website. The one good thing about Fundrise is you can look at individual properties, see what they bought it for, see where it's at, see the location, get a little under the hood, see how your funds are doing. But anyways, thank you all for watching. I will make more Fundrise updates. It's a slower term thing, so it's long term, and we'll see where this takes me. Thank you guys all for watching. Hopefully the rambling didn't kill you guys from watching. If you did enjoy this video, or if you want to, say, guys, subscribe. I know a lot of you guys aren't subscribed. And if you could leave a thumbs up so other people could see this video, see what Fundrise is about, learn about it. I have a few other videos on the channel about Fundrise, or just investing in general, dividends, and other stock stuff. So thank you all for watching, and have a good day.